How many of you have had a dream once upon a time of discovering this long-lost uncle or aunt that gives you a lot of money and you have this inheritance that you didn't expect? And, well, the reality is that there's a possibility that that would be taxed. Sad but true, isn't it? Let's talk about some of this, though. What are the instances where you've received something as a gift where this is taxable, and what are the instances where it is not? To tell you about everything that you need to know about this so that you don't find yourself on the wrong side of the tax laws is Abhishek Mehta, who is a chartered accountant, CFA, and founder of Investza Capital. Thanks so much, Abhishek, for taking the time.
Thank you.
So there are a few rules that govern gifting, right?
Yes.
First of all, my understanding, anything that you receive from a blood relative is tax-free, right?
That's right. That's one of the most common questions which everybody keeps asking. If I get a gift from my mother, father, or anybody of my blood relative, is it taxable or it is tax-free? So under section 56(2), the entire amount is tax-free. What you need to really check is from whom are you receiving this money?
Right.
So there is a very specific section which gives you the definition of relatives. So you need to check if that person is being considered as a relative in that definition.
So let's talk about it.
Yes.
And there are various places that you could get the money. Like
Yes.
I said, long lost aunt or uncle that has
Yes.
said, okay, this is my favorite nephew or niece, and I'm going to leave them $1 million.
Yes.
What are the rules about, and what is the matrix, if you can call it that, of people that you can receive this from?
So basically the family tree, basically it covers, you can receive the gift from your husband or wife, you can receive it from brother and his wife, sister, his husband, wife's brother, wife's sister, or probably their husband. You can receive it from your father's brother, father's brother's wife, mother's brother, mother's brother's wife. So the entire family tree is being given. What one needs to be very careful is that, for example, I can receive a gift from my grandfather, but I cannot gift him.
Oh, okay.
I can receive a gift from my father's brother, that is Chacha, but I cannot gift him anything. If I gift him something, that will be completely taxable in his hands.
So
but
all of what you've described is tax-free?
that is tax-free. But if I give something to my Chacha, that will be taxable.
Why does it work like that?
Because the relative definition doesn't cover that.
So it all flows downward?
Downwards. So if I get anything from my grandfather, it is tax-free. But if I gift him something, that will be taxable.
Okay.
So you need to plan your things accordingly. So probably you can layer it out this way that I give it to my father and my father then gives it to my grandfather.
Oh, if you give your dad, it's fine?
It's fine. And then my dad gives it to my grandfather, that is also fine. So you need to plan it this way, which people a lot of time forget. So you have to be very careful and look it from the receiver's perspective, whether that person is covered under the relatives definition or not.
What is the section that covers all of this?
Section 56(2).
Okay, so in case you have the urge and a lot of free time, you can go and look at section
56(2).
See, I've already forgotten. So, or you can listen to Abhishek right now.
Yeah.
But having said that, there are people that you can receive gifts from
Yes.
that don't fall under the ambit of this. In which case, what are the rules that govern taxability?
So basically, see, the general law is that if you received any gift more than 50,000 rupees, it is completely taxable.
Either cash or kind?
Anything. Cash, kind, car, property, name it anything. If you receive anything from anybody more than 50,000, it is taxable. Now, there are only 4 instances where this money is non-taxable. The first instance is if you receive it from the relatives. The second instance is if you receive this amount on your marriage.
Okay.
So if Mukesh Ambani in his son's marriage got probably like 1,000 crore as gifts, that all amount is tax-free.
Oh.
Okay, whether it came from a relative, non-relative, friend, cousin, anybody, all that amount is tax-free. He just has to maintain the records.
Sure.
The second thing is, if you receive any money in inheritance, so suppose one of my friend is probably no more and he gifts me something, okay, on his will, then that amount is tax-free for me.
Okay. Even if it's a friend?
Even if he is a friend. And third is, if the donor is on the deathbed and he gifts me something. So suppose any of your friend is on deathbed and that time he decides to give you 50 lakhs, that amount is tax-free. So only
But how does that distinguish? And as morbid it is to ask that question.
Yes.
How does that differentiate from writing of a will and transfer of assets if you're on the deathbed, and how do you
Yes.
prove that?
So see, will to obviously you will have a
Sure,
will.
that's
Okay?
fine.
So that will you can give it to the income tax department that I got it as inheritance. Luckily in US there is an inheritance tax of 40%, but we don't have that.
Right.
Even if we get it from our fathers or a friend. When a person is on deathbed, then obviously some medical records will be there, and that will prove that this amount you received at that time the donor was not in the right health condition, and that is why he gifted you those amounts, and that will be tax free. Otherwise, if you receive anything more than 50,000, that is taxable.
I know this might sound like a movie script, but what if your friend, and I hope that is the case, they actually survive? Then what happens?
Then probably you have to, declare it to the department that these were the instances
Then it
which
becomes
happened.
taxable.
No, that will not become taxable, because if you could prove that at that point of time, at that situation, that person was on deathbed, but probably he survived. So that the burden of proof is on you, not on the department.
Okay.
So you'll have to prove it, and that will probably happen in not more than 1 or 2 cases out of lakhs.
Okay, if there's anybody listening and they got an idea for a movie script, well, you heard it here first. Give us a little bit of credit. So is there anything else that you need to know about with regard to gifting?
There are some points you need to always keep in mind when you are receiving a gift. Always keep proper records from whom you have got this gift, because then the burden will be on that person to prove what was the source of the money. Okay. Never deposit cash into your account, because that point of time the income tax department is very vigilant, and they are keeping a track that what was the actual source of this cash. So I have seen this in past. People say that this was a gift received from my father or mother. Then they go to the assessing of father and mother, and there is no source of cash. It becomes a problem. Third, while filing your income tax return, you have to file this under exempt income, so that there is no mismatch with what you are saying and what you are filing your income tax return. Lot of time it is not required, but suppose if my father is giving me 50 lakhs, people make a gift deed. Okay, that also then helps you in future if any inquiry comes. Usually for property and all, there is always you have to make a gift deed and get it registered. So these 4-5 points are very critical while receiving a gift.
Yeah, it's always to anticipate what the tax department might want to see as proof, and prepare it in advance. And of course, it goes without saying, everything that we're discussing, as we normally do, you should consult with your advisor, either financial advisor, as the case may be, or a tax advisor that you might be consulting. But there's one more point that I wanted to discuss with you outside of gifting, which is we've seen a lot of bonuses being issued. Right, in the equity markets by companies. And there is a tax law that is useful to remember in this case. The technical term is bonus stripping. What does this mean?
So Section 94(8) basically covers the bonus stripping. What used to happen earlier, people used to claim unlawful short-term capital losses using this technique of bonus stripping. But then income tax in 2022 came up with a Section 94(8) stating, if you buy any share which is issued a bonus before 3 months of issuing the bonus, and if you sell it within 9 months of issuing the bonus, then any short-term capital loss which has been generated due to this action, so 3 months before the bonus date buying and 9 months after the bonus date if you sell, then you cannot claim short-term capital losses on this stock. You have to adjust the short-term capital losses with the bonus shares what you have received. The cost has to be adjusted. Now, how do people use this still is, if I know that supposedly XYZ company is giving out a bonus, I will buy it now, I will wait for 9 months, I will sell my original shares on the 9th month one day, and incur my short-term capital losses. And this short-term capital losses can then be adjusted against your short-term capital gains or your long-term capital gains. To give you an example, like in debt mutual funds, the short-term capital gain is taxed at 30%. So I can generate this short-term capital losses, set it off against the short-term capital gains, and after the 12th month, I sell my bonus shares, so that the entire proceeds of gains will then become into a long-term capital gain, which is taxed at 12.5%.
So this is all to do with your investments. If you're thinking from the perspective of taxes, and it's a great ability to have. But then, of course, bear in mind that most investments that you will make are for the long term. And so from that lens, you might want to put all of that into context. Abhishek has given you a great idea, but wait, along with what you're doing on an ongoing basis and your long-term investment portfolio. We will talk to Abhishek down the line as well about key sections that you should bear in mind of the Income Tax Act. But with that, thank you so much, Abhishek, for taking the time today. That brings us to the end of this edition of Your Money Matters. Thanks so much for tuning in. This is NDTV Profit.